Just 2 years after, just 2 years before, again, 2009, again in October, 1 October I was here. It's a pleasure to be here, and thank you very much for taking time out of your valuable time and to be here. As Shafiq mentioned, today I'm looking into the socio-ethical failure. Of course, it's a huge topical area, and I don't think that in half an hour or 45 minutes I can do justice. And because of my failure of sending the handouts earlier, they couldn't circulate by printing it to you. But I hope they will be able to email you so that you will be able to have access. Otherwise, it is a rather large material. And it is important, however, to have the broader understanding in order to locate the particular issue that what we have, socio-ethical failure in Islamic moral economy, as I call it. And of course, banking and finance and socio-ethical failure, perhaps in the first analysis, it doesn't match, because by definition, banks and finance are there to make profit regardless of the ethicality. However, of course, in the recent years, well, not necessarily that recent, but since 1970s, even in conventional banking and finance, as well as in the corporate sector, the movement towards more socially and environmentally acceptable practices has become an important norm in the evaluation of corporations. Therefore, we have a large number of institutions in the conventional businesses issuing their corporate social responsibility reports, and disclosures are an important part of the process. And since this is happening in the conventional finance, which is based on a classical understanding of efficiency, why this is not happening in Islamic finance? That's a huge question. Because by definition, we always refer Islamic finance as being ethical. So if it is ethical, then how come the same practices we do not see in Islamic finance? Of course, by definition, when we look at the root of the issue or the whole paradigm of Islamic finance, the root is Islamic moral economy. And Islamic moral economy directly informs us that this is a moral economy understanding. And Islamic finance, being part of this paradigm, by definition should be therefore moral, should be acting on moral aspects of the Islam. However, the recent studies that we have been conducting, as well as others have published on the subject matter, the social failure, as I call it, is a particular issue. However, if the social failure or the social aspect of the issue is an exogenously determined or external factor to this institutionalization, perhaps it wouldn't have been that much important. Of course, it's important, but at least institutionally or in terms of the consistency within theory and practice, we wouldn't have much problem with it. But what we have here, a moral economy, and that moral economy requires by definition, as a consequence, a moral outcome. And since Islamic finance is the product of that moral economy, then the outcome is not necessarily moral. So therefore, these are the issues that I like to discuss, hopefully, in this session. Of course, Islamic finance is a success story. It's doing fantastically all over the world. A number of countries, perhaps more than 75 countries involved. The asset base is growing amazingly. Of course, the financial crisis impacted the performance of Islamic finance. We had few failures, not failures, but few difficulties, in particular because of the business cycles in the Gulf, not necessarily inherently Islamic finance problem, but generally the picture is quite good. It is developing fantastically. Every country, one way or another, wants to be part of the whole process, including France. Of course, despite the religious issues being always a matter of tension in the country. So the picture is rather good, but then there are the problems when it comes to the social dimension of the issue. And that, of course, directly brings us the nature of Islamic banking, the commercialization and market pressures, in particular since 1990s. with the globalization of Islamic finance as well, the deviation from the norms of the Islamic moral economy is a reality. Of course, when we raise this issue, we are terribly criticized that Islamic banks are not charities. So why you are pressurizing us for socially responsible? Well, the definition is important. Therefore, we are going to discuss what's the definition of Islamic banking. In other words, that prefix in Islamic banking, that is Islam, has certain implications, and that implication is moral economy. And therefore, by definition, I am in a right position to question Islamic banking in relation to the consequences, whether it is morally acceptable. But that deviation from that norm, Islamic moral economy norms, is a reality in few areas due to market pressures, of course, with the commercialization of Islamic banking, of course, moving into more debt-based and slowly introducing and justifying all these toxic elements or the instruments coming into the process. And therefore, a new role perhaps for Islamic finance is essential, considering even that the conventional corporate sector is moving into more socially acceptable dimension. And therefore, my intention today is to go through with you and discuss these issues. Of course, the recent debate started very much around the Sharia-compliant finance versus Sharia-based financing or Islam-based financing. That directly refers to this difficulty between the two because it directly identifies that there is an aspirational Islamic finance, that is how it should be, as opposed to how it is practiced today. Because on the one hand, we have, of course, Islamic banking shaped around efficiency and profitability, which is very much normal. But on the other hand, the call for moral outcomes as well, and that moral outcome is not necessarily happening. And this is, perhaps we can easily justify why it is necessary that we are expecting some moral outcome in the process. Those of you familiar with the literature on Islamic economics, banking, and finance, you would see that mainly 1970s, beginning of 1970s, the initial writings on the subject matter, but mainly focusing on the developmentalist failure in the Muslim world, directly referring to the developmentalist need in the Muslim societies, and therefore trying to find a solution, an authentic solution in a culturally relativist matter, namely Islamic manner, to find a solution to the problem. Hence, that was the paradigm around which the whole systematization of Islamic finance started. And therefore, the theoretical dimension of the issue is very much refers to how in developed society or how economic development can be achieved. And even going further, not necessarily simplifying or relegating everything to economic development, but larger human development. And if you look at the writings of Chopra, Naqvi, Khurshid Ahmed, Sadr, and others, very much the same theme always comes up, how the economic development can be achieved, or the development in a larger perspective can be achieved. And therefore, when we look at as a theoretical base to that and what is happening today, that gives us an understanding that perhaps the divergence that we are talking is not necessarily just over exaggeration of the story, but is reality that is affecting us. So when we look at, therefore, I call this founding fathers aspirations was very much a systematic understanding how to overcome the economic problem. And within this, of course, they considered Islamic finance being part of this larger paradigm rather than being just institution of financialization. And there is that distinction which I'm going to touch on, the financing and financialization. This is an important distinction. Then, therefore, in the initial aspirational worldview, the whole issue was financing the economic activity in a real economy manner. So the link between real economy and financing was recognized as an important part of the process. And therefore, one way or another, an ideal of Islamic developmentalism in economy was considered as part of the process. Therefore, if you look at the initial writings and the theoretization, which of course paved the way for the development of Islamic finance, is very much around this theoretical understanding how an economy can be created, an economic system can be created. And of course, economy is a much larger concept than the finance. Finance is part of the economic system as we understand. Therefore, is a paradigm, is the Islamic system of economics mainly, rather than just being Islamic finance. And therefore, when we look at the definition to establish a benchmark in relation to socially judged Islamic banking, when we look at the definition, what we see in the early definitions of Islamic economics, what we see always, the justice element is coming very much into the agenda. It's always the realization of justice, the importance of social justice, and etc. As you can see, one of the initial definitions, 1974, is the science that deals with the wealth and its relation to man from the point of view of the realization of justice, and hence it always comes up. Again, Hassan al-Zaman's definition, we would see that justice, social justice, realization of that, as well as a individual's development is mentioned. Again, another definition by Akram Khan, as you can see, the human falah, the human welfare, human happiness is the subject matter of Islamic economics, and etc., Chopra and others. So when we look at all this, it refers to a particular social paradigm around which the Islamic economics as a paradigm is constructed, socially constructed. And that is important to state before going into deep when we talk about Islamic economic system, and for that matter even Islamic finance, this is not directly given in the Quran or the tradition, but the principles are there. So we are taking the principle to socially construct banks, at the same time the Islamic economics construct. Otherwise, the system understanding, of course, is not part and parcel, or in the Quran it doesn't identify, look, this is the system that you have to use, but with our ability with our understanding, with the principles that is enshrined in the Quran and the tradition, we try to socially construct the whole system as well as the institution. So when we look at in the process, what we see as what suggests us that this is a moral economic system, the principles directly located in the Quran and the tradition. And those principles, when we look at, again, is very much ethicality, is very much justice, such as the vertical ethicality, okay, that directly requires that the individual's equality in the sight of God, as well as the social accountability or the spiritual accountability in the hereafter. And therefore, again, the justice, as we can see even from the beginning, from the umbrella understanding of the Tawheed or the unity of God, that immediately reveals itself as an ethical system. Then the horizontal ethicality and equality, Adala and Ihsan, I can see that it is defined there in a fantastic way. What's the meaning of Ihsan? That's an important part and parcel of this ethical system, the social justice and beneficence. So we try our best to achieve social justice in the society with our economic actions as well, but at the same time, individuals aiming at achieving the ihsan or the beneficence level, being good, so of course excelling in themselves, but at the same time helping the others to excel. Hence, social justice, which is defined as well just over there in the same manner. And of course, the tazkiyah, the growth in harmony. Individual growth, the social growth, as well as the relationship between individuals, individual to society, individual to state, in a harmonious way, achieving that harmonious growth is an essential part of it. And Then going into another axiom, another major principle here, the enabled individual, enabled society, and the natural environment, because everything is created with a perfection, and that path of perfection has to be recognized, and any obstacle that is in front of this path should be removed. And to overcome the conflict between self-interest and social interest. So social interest always comes an important part of the process, but at the same time the recognition of the self-interest, of course, in Islam as well. And to overcome that, certain actions are made mandatory so that the conflict between the two can be overcome, such as the zakah, for instance, the charitable mandatory almsgiving for that matter. And then, as we can see, there's an ethical system here. Even the very definition of Sharia, or the maqasid al-Sharia, the objective of Sharia, is defined as the human well-being. So whatever we do, it is for the human well-being. And the immediate consequence of that, of course, the ethicality. And the consequences of that, what it tells us, it's a very ethical society. Because of time limitation, I'm not going to be able to discuss all this, but equality in the society, yes, we all work hard and earn, but at the same time we have the social responsibility, returning the right of the society to society, having that social responsibility in front of us as an important element in our objective function. The wealth creation, there is nothing wrong with that. Islam is very much in favor of wealth creation, but introduces the moral filter. That moral filter again goes to the ethicality or the social justice in the process. Like any other system, we can easily locate the institutions as well here. The institutions very much, of course, market remains as an important mechanism, and is very much, if you look at the writings of Ibn Taymiyyah, for instance, he's very strong proponents of market system, fully recognizes and fully supports it. Even the price he would consider established through supply and demand as the price of God. But at the same time, he recognizes the market failure. Therefore, he suggests HISPA system, the regulatory system, the moral filter to the market at the same time. And again, the nature of market mechanisms. Yes, competition is essential, but cooperation, because the outcome that is expected is the moral outcome, and therefore cooperation is considered. Private property is essential. Yes, again, the moral filter, considering that this is a trust for individual, so temporary ownership in reality in a spiritual manner, and hence directly referring to the ethical or the social nature of the process. Again, to summarize it, because it's a terribly detailed issue, but to summarize it, perhaps Ibn Khaldun's definition of the process is best to tell us, but rather than going through everything, the importance of creating wealth, al-mal, and that can be done through development, hence development efforts are essential, but again his reference, development cannot be achieved except through justice, adalah. And he would consider, therefore, the justice is the mizan, is the criterion that individuals will be, of course, evaluated in the sight of God. And hence the direct reference to the social justice aspect is an important. And Islamic finance, of course, is part of this value proposition. So it is normally what you would have, as we have in the conventional economics. You have an economics paradigm, and that would have institutions including finance. Finance is part of that paradigm. And here, of course, the expectation was that Islamic finance would be the financing instruments, financing institutions of this paradigm of Islamic moral economy. And therefore, it is, in origin, it is a value-oriented proposition. Contributing to the aims and the aspirations of Islamic moral economy. And Islamic finance, therefore, or Islamic financing in this paradigm impose the role of generating the necessary funding to achieve human development-oriented society as an essential part of the process. And therefore, the usual, as you all know, so I'm not going to go through, but important principles, the principal tenets, of course, course, as part of the Islamic moral economy. It's an alternative paradigm in terms of establishing morality in the market, establishing stability and link between real economy and financing. It is the community banking nature. At the same time, is grounded very much on the ethics and values. So these are accepted. And therefore, it is a holistic approach to financing the society as considered. Now, normally, of course, when we define it, most of the time, what we have, we are told the Sharia sources, we are told the contracts available, but importantly, when we define the Sharia filter, unfortunately, the reference is not done to the moral screening process. This moral screening process, of course, is essential for us to produce an outcome that is acceptable, socially acceptable. So it is the moral process through endogenizing process. In consequentialism, not only looking at what finance operates, but what are the consequences of this process. So consequentialism is essential. The embedded financing nature, development-oriented society are important part of the process. And therefore, the outcome has all these principles or the prohibition, including interest, but the financing solution aiming at capacity building, empowerment of individual society, the natural environment, but social, human, and economic development as an objective function given to Islamic banks by definition. So since we have this nature or the values assigned to Islamic finance, we can use these values through which we can evaluate the performance of Islamic banking over the years to understand what is happening, such as the socio-economic development. It is important, of course, to stress the first experience, from Egypt, the Montgomery, for instance, a social bank, an Islamic bank, but social banking nature. Of course, the political economy of the time didn't allow the operation of Montgomery to continue, but it's very much developmentalist oriented, contributing to social capacity development by providing financing to small businesses, and hence the capacity building was an important part. Or Tabung Haji as an investment institution in Malaysia in 1967 established, again an ethically investing institution helping the community in a manner to enable them to save their monies for their trip for Hajj pilgrimage, but at the same time conducting their activities within the acceptable norms. So you have this, so it is not very much utopian. There are certain examples historically, and not that early history, but in recent times, in modern times, there are examples for that. So when we look at, for instance, what has been the contribution of Islamic banking and finance to socio-economic development, what we see, for instance, these are the figures from 2009, the asset base of Islamic banks in certain 25 countries, okay? Iran, Saudi Arabia, and etc., large numbers. But at the same time, I try to look at the Human Development Index. Human Development Index is a composite index evaluating the countries in terms of their achievements on the human development, looking at the education, looking at their participation in the economy and society, gender issues, and etc. So when we look at, of course, the Muslim countries in particular, but they are not performing very well, unfortunately. In the recent years, of course, Gulf countries has done well, but even when we look at the Islamic financing, of course, in terms of the asset base, includes such as UK is in the 8th on 2009 in terms of asset base, so human development of the UK, and etc. So just a very simple analysis without going too far, through a regression analysis, having the correlation to establish whether Islamic economics, Islamic banking and finance has any positive impact on human development, we see that we cannot establish a pattern. So there isn't any positive pattern coming out from the analysis, just simple correlating the asset base of Islamic finance and their outcome in terms of their contribution to human development. So even just a simple analysis will tell us, of course, you can easily criticize me on this by saying that, well, the asset base of Islamic banks in the countries in question are really small, the largest being perhaps in the Gulf as well as in Malaysia. Malaysia is around 20%. In the Gulf area, again, it ranges between 15 to 25% of the entire financial system. Yes, it is true, I accept that, but at the same time, I would have accepted to establish at least a slight pattern, to establish a link between the two, the asset base and how it is used in terms of their implications for human development. So that we can establish. The objective, again, going through the objectives such as the community banking, of course, as mentioned before, since early years, since the establishment of Dubai Islamic Bank as a commercial Islamic banking, of course, the market determines. So it is rather than demand determined, it's supply determined industry. In particular, the petrodollars in the region, of course, contributed to the rise of or the institutionalization of Islamic finance. Therefore, community banking understanding hardly has been an issue, despite the fact that it's always articulated as an important part of the Islamic finance paradigm. But again, regarding the Islamic finance being responsible finance, that responsibility, of course, requires the regulatory environment, coping with the regulatory environment, systematically check and balances on the activities of Islamic banks and financial institutions. Of course, we have two main regulatory environments in addition to the national regulatory environment in each country, IIOF and FISP. But of course, their rules and regulations are not mandatory. So certain countries have accepted as mandatory for their operations of Islamic banks, but in majority of the countries in which Islamic finance are, the standards established by these two institutions are not mandatory. So what happens, like we conducted a study recently, very recent study, just sent out for publication. We sampled 35 Islamic banks from different regions in the world, and we looked at their Sharia governance scores. We established an index through IFSP rules and standards, and we looked at how much they are complying with those rules and standards. And the result came out that none of the banks, and we had our index was like 50, okay, because we got the 50 standards from IFSB, and looked at the banks, 35 banks, none of the banks could come up to best practice as we define 60 to 50 point. As around 33% good practice, scoring 36 to 45, and another 40% improved practice in terms of scoring 26 to 35 point, and some in the emerging practice and some underdeveloped practice. And we thought perhaps if we correlate this with the how old the bank is or how long it has been operating, we might see that the older banks perhaps are doing much better in terms of establishing standardization in their institutions. However, the results show that unfortunately the older banks are worse in terms of their compliance with standards established by IFSP, for instance. So in terms of the other issue, of course, as part of this aspirational view of Islamic finance as it's established, the restraining indebtedness. Of course, that's an important discussion going on. The whole issue, the asset-based Islamic finance as opposed to debt-based Islamic finance. So it's a whole discussion. There are huge justification, of course, why it is debt-based, to minimize the risk, of course, to reduce the cost, and etc. But of course, beyond that, there's that expectations how we can achieve economic development at the same time, because that's objective function has been imposed on Islamic banks, which is not recognized, of course. So the whole idea of whenever someone defines Islamic finance, the first thing would come up, of course, interest, prohibition of interest. The second is profit and loss sharing. So whether that profit and loss sharing is happening in reality, of course, is a huge question mark, in particular with the new products coming into market, including Tawarruk and others. So that is a huge mark. So looking at how much, what's the percentage of that financing in Islamic banking and finance, we see, of course, majority of the financing is debt-based. That's a reality. Such as in Malaysia, the data shows that around 92%, 92.5% to 95% of the financing in Islamic banking is entirely debt-based. In the Gulf is a bit lesser, around 75%, and this is a reality we have. So the whole definition immediately, when someone defines Islamic finance being asset-based, it is not necessarily happening, and that's the immediate definition. So it is not happening. Even looking at certain banks, for this is very recent data based on 2000 figures we collected from a number of banks, looking into in each categories of financing, how they are doing. As you would see that the asset-based instruments are hardly utilized by Islamic banking, and that's a reality. Of course, again, the reason is commercialization, because they are commercial, they are competing, and etc. But the whole issue, of course, ontologically, as an existential question, whether they have to do that, that's another issue. And another part, of course, contributing to the capacity building in a society, you would expect Islamic banking to operate in such areas which directly create value added. Okay? But as you can see, again, this is very much 2010 data, directly tells you the areas in which Islamic financing taking place or Islamic banks are investing. So majority of the areas, of course, related with mainly real estate, as we have witnessed in the recent years, very much real estate happening. But the other areas such as manufacturing, agriculture, these are all long-term projects, of course, contributing to economic development and capacity building, is not necessarily getting the attention of Islamic banks. And that's the reality we have. The data, when we look at the data, for instance, for the Sudan Islamic Bank, in the initial years, Sudan Islamic Bank, for instance, heavily involved in agricultural financing. However, with the commercialization, of course, we're trying to compete with the market. In later years, they withdraw from that field as well, and hardly supporting the area. So the ethical investment issue, again, it brings us to the whole discussion. Hardly, those of you who have seen the Islamic Bank's reports, hardly there is any disclosure, or the disclosures are terribly limited in terms of their corporate social responsibilities. Recently, we have checked, for instance, Saudi Islamic banks in a very recent study just completed, looking into their disclosure in corporate social responsibility, and out of 5, the maximum you get around 2 or 3 mark for each bank. So in terms of what they are achieving with corporate social responsibility, we have huge questions there. Now the issue, as I mentioned in the beginning, if it was a conventional bank and not necessarily directly contributing hugely to corporate social responsibility, that can be acceptable, because by definition, it's not a bank to contribute to social development. However, Islamic Bank, as we have gone through the whole conceptualization of Islamic Bank, based on that as an essential requirement, is an existential part of the whole paradigm, and it is not happening. Other institutions as well issued reports on the corporate social responsibility in Islamic banking. The similar results has been established. So therefore, we have a particular corporate social responsibility issues in that the scores are not necessarily encouraging what is happening in the Islamic finance in terms of contributing to the larger society. Being an alternative paradigm, of course, that alternativeness with the convergence of Islamic finance towards conventional financing or the banking has anyway eliminated in the process, because in order to be alternative, the convergence perhaps should have taken place from conventional to Islamic to be more ethical, but unfortunately the convergence is going the other way around in terms of direction. Islamic finance is heavily converging towards conventional financing. And the worst part of the story, perhaps Islamic Islamic finance will learn how to be corporate social, how to act in corporate social responsibility through conventional banks, because we have seen that great developments are taking place in the corporate sector, conventional corporate sector, in terms of their involvement in the larger development of the societies. So that's a terribly strange story, of course. The expectation was that the ethicality will be introduced by these banks to the market at large, but perhaps Islamic banks and financial institutions will learn. Perhaps that has been the direction of learning anyway in the last 100 years, and that will repeat in Islamic banking as well. Therefore, being a moral compass is not necessarily working in terms of providing that morality to capitalism. To produce socially acceptable outcome is not happening by definition. Perhaps considering as well, not necessarily directly involved, following the rules and regulation standards, they have more free hand than conventional banks for that matter. So therefore, fulfilling aspirations, how it's happening in terms of contributing to the larger expectations of the society, whether the life of ordinary people on the streets, where Islamic finance is growing, whether it has been affected. Of course, there's a huge question in that, because it is not necessarily happening, including microfinancing. The whole process of not engaging with microfinancing, contributing to that process, is something that, of course, is a huge problem, because fulfilling aspirations, at least, could have been achieved through microfinancing, but hardly many Islamic banks involved in microfinance. We have only a few examples, but the rest is not necessarily happening. In a recent conference in Madrid, for instance, I have witnessed that quite a number of banks in Spain involved in microfinancing. Not only that, European Union's white paper on social banking, for instance, trying to encourage banks to move into more socially acceptable institutionalization, contributing to social development through social banks, is an important issue to consider. However, that is not necessarily happening. Somehow the replication of the history. So in particular in the Gulf region, the capitalist system of the 19th and early 20th century has to be lived through in order to come to that understanding that social aspect perhaps is important part of the process. And that's an issue. That's my passion, of course, always giving the example of the Zamzam Towers, for instance, the failure, the social failure, the financing of projects which undermines the environment, the history, and etc. in a larger Muslim world, but beyond, is not necessarily paid much attention by Islamic finance. In other words, evaluation of the projects, unfortunately, does not include the social dimensions of the issues, the environmental consequences of the issues. Again, it very much goes into the form versus the substance. So the Sharia scholars just sitting down, looking at A is selling to B, B is selling to C, and etc. And that is halal, so that's okay. But what happens after that? I was happy to see that recently Al Jazeera covered the issue. Of course, they didn't cover it from the Islamic finance perspective, but at least they should. So this is a project financed by Islamic finance. Okay, just for instance, the Sharia scholar who approved it, I directly asked the question because you have other projects involved, the conventional banks involved, such as, I always give an example, there was a dam project in Turkey, Barclays Bank involved, but later because of the pressure from the environmental NGOs and other sectors, they have withdrawn from the project, financing the project. So just ask the question why Islamic finance could not withdraw from this project. As simple answer, people need accommodation. Okay, that's simple. Well, people need perhaps water and electricity as well. But social responsibility requires that you may not necessarily, for the short-term interest, you cannot sacrifice the long-term expectations of people, and that's the reality you have. On the other hand, of course, how many people from the Muslim world, when they go to Hajj pilgrimage, stay in Zamzam Tower? Looking at the per capita income in the Muslim world, of course, the accommodation cannot be utilized to justify the existence of the project. But even the simple advertisement, sitting sitting in your balcony and having your coffee over the whole spiritual understanding even undermined. And Islamic finance do not have any problem of financing that. And unfortunately, I haven't get this understood by the Sharia scholars, and that is a reality. So how it is happening? The time is passing by. Just, of course, one of the major reasons why we are having this social failure is the move from Islamic moral economy to Islamic finance. So we have this larger paradigm which suggests the producing a moral economy as a system, and in addition, however, apart from that, you have institutions which call themselves Islamic finance, and rather than directly linking themselves to the aspirations of the paradigm, the foundation, entire shift to neoclassical understanding of efficiency and profitability. Thank you. And that is something that, of course, is a huge concern. So the realities of markets have been prioritized rather than the expectations of the entire paradigm. And this is happening, but at the same time, and therefore the entire process has been relegated to, or the ethicality, because everyone talks about the ethicality of Islamic finance, but that ethicality has been relegated to prohibition of interest. Well, ethicality cannot be a legal issue, because riba, or the prohibition of interest, is a legal requirement. By definition, you have to do that. But ethicality goes beyond that as a proactively what you are doing. And on top of that, of course, here there's a requirement to be ethical as well. Therefore, prohibition of interest does not make something as ethical, because the outcome is very much similar. Just you are doing in a different way. So the outcome, therefore, the consequentialism is essential. Looking at the outcome is important, rather than just sticking to the process and considering that as ethical is an important issue. Of course, as I referred before, as an outcome of that process, the financialization of this sector, particularly moving into, or moving away from financing the real sector, the embedded nature of financing, okay, is no longer an issue, which of course was the experience in the West, in the conventional financial world as well. Initially an embedded financing, then mid-18th century, that divergence from the embeddedness to financialization took place. It seems that the similar trend is being followed here as well in Islamic financing. So therefore, the financialization, of course, by definition, does not pay much attention to the ethical issues. I wish I had time to go through with that, but like Allama Muhammad Iqbal's fantastic poetry, when he criticized the banks, the existence of banks, by definition, is an existential issue. He criticizes it, and unfortunately, the same thing is happening in the Islamic finance. Of course, the definitional issue. Okay, bank by definition is there as part of the conventional knowledge to maximize profits, the channel, the financing, and etc. So there is functional understanding of banking. Perhaps, therefore, rather than keeping on banking on Islamic banks, perhaps other institutions could be generated in the process to respond to the expectations of the Islamic moral economy. Banking, by definition, perhaps, as an institution, and in relation to its function, perhaps is not the institution that can respond to the expectations of Islamic moral economy. Other institutions, therefore, non-banking institutions, perhaps, should be considered as an important issue. Because you have bank by definition what it is, then you are imposing on that social welfare issues, maximization of the social welfare. So therefore, the inconsistency between institutions and the expectations, because banks by definitions, okay, are not the best instruments for economic development. For economic growth, yes, and they are achieving economic growth, including Islamic banks contribute to economic growth. But what happens, how we can translate that growth into development, is an important question. Of course, we have to respond. An important reason of this social failure, as I mentioned, the whole priority of fiqh over the substance is an important issue. How we look into this issue, because when we look at the product development and the operation of the Islamic banks, is very much fiqh dominated. In other words, Sharia scholars sit down, look at a particular product, whether that product is halal or not. And in this definition of halalness, unfortunately, the consequentialism is not taken into account. What happens, yes, this product is halal perhaps, by definition how it operates, but what happens when it is practiced in the reality? When, in my view anyway, in the development of that product, even those issues, those moral and ethical issues have to be taken into consideration. But that is not done, the consequences are not taken into account. So the hegemony of the fiqh and Sharia scholars, unfortunately, are not helping to generate a moral economy. We had, Shafiq was there, we had in April a roundtable with Sharia scholars in Durham. We brought majority of the Sharia scholars, and unfortunately the Sharia scholars are crazily capitalist. And that's the reality. What you would expect Sharia scholars to be morally oriented, but unfortunately that's not the case, and that's the reality. And we have recorded the entire meeting. Of course, we cannot disclose that, but you know, I mean, one of them said that, look guys, you know, why you are criticizing us? We are here to manage the monies of the rich people. I mean, Shafiq was there, he heard as well. And that's the reality you have. And therefore, the inconsistency between aspirational view, what you would expect, and what is happening, unfortunately, with the contribution of the Sharia scholars. However, in reality, fiqh is only a small part of the process in this moral economy. It is just a process. It is related looking at whether the product is working in the interest. But in that definition, therefore, the moral economy has to be taken into account in deciding whether a product, whether a contract is halal or not. And that is not done because this is very much a rationalistic, legalistic position. And that rational, legalistic position does not consider the moral issues as part of the whole definition, unfortunately. And this is what we are, unfortunately, facing today. And in their understanding, trade is halal, riba is haram, khalas, then everything is done. And that's, therefore, the moral expectation is very much relegated to the prohibition of interest, which is problematic. And therefore, when we are told how we can locate Islamic banking and finance, it is immediately we are told that it's part of the Sharia process. As you can see, the moralities and ethics doesn't have direct link in the process. In other words, this is missing. So in the fiqh definition of Islamic finance, that is missing. So what we are told, this is the picture we have, the picture should be this. And unfortunately, this is not happening because of this rationalistic and legalistic understanding of the process. And therefore, the importance of consequentialism is essential for us. I wish I had time to go through, but in Qayyim's position in this, for instance, is an important learning for us, saying that how the so-called elimination of riba can result in terribly wrong consequences, and he saw that from centuries ago as a lesson for us. I shall finish it, but again, pragmatism and institutionalization and epistemology. Again, that brings us the whole existential question of banks. Whether they were the right instruments or the institutions to create to respond to the expectations. This is very much, as I mentioned, the whole story starts with 1970s, but the intellectual, unfortunately, shortcomings has not helped to create alternative institutions. Therefore, in 1970s, those of you familiar with the Islamization of knowledge movement. Islamization of knowledge movement just considered Islamizing the whatever available around us, in particular in social sciences. So what happened as a particular product of that, banks Islamized in the process as a concept, as an institution. So rather than having the process, because the normal process would go through, you have an ontology, and you have institutions in relation to that produce, as we have in the Western world. So you have positivist ontology with rational individualistic methodology, and that provides the epistemology. The result is the meaning and institution of everyday life. And here, of course, you have entirely different ontology. That's a revealed knowledge. And by definition, that should have produced an institution, alternative institutions. But a shortcut in the process, okay, by using the fiqh, so the institutions of here brought here and Islamized in the process. This is very much related, of course, the intellectual shortcomings in the world rather than being able to. But at the same time, when I had a discussion with the founding fathers, they suggested that in 1970s they didn't have much option either, because suggesting even commercial Islamic banking was a huge political difficulty in the Muslim world as well. To try to convince anyone in the Muslim world even saying that, look, there's something called Islamic banking possible, they say that that wasn't possible. Therefore, the only solution they could come up with to convince the politicians in the Muslim world was commercial banking, and which, of course, they consider as a short-term solution, but that short-term solution, of course, became a long-term solution. And at the same time, of course, behavioral norms, because we talk about all this ethicality, but ethicality is not only required from Islamic banks. What happens to us, individuals? You know, what is our responses? The whole issue goes whether Homo Islamicus is Homo economicus plus the ethical individual. That constitutes the Homo Islamicus. But whether that is happening is an issue without going into detail. If I give you, for instance, some empirical data to understand that, to look at how people react, individuals, in terms of their behavioral norms. Because we are talking about behavioral norms, not only organizations, but individuals, not only institutions, but individual behavioral norms, because they are expected to be ethical. Considering that the ethical financing in the Western world is very much a response to the demand. Rather than supply creating demand, there was a demand, and responding to that, ethical investment started in the western part of the world. So looking at whether that is happening. This is a case from Malaysia. We collected data and we asked certain questions to individual, those who have profit-sharing deposit accounts with Islamic banks. We asked them whether they are concerned about deposit returns. Of course, they are very Homo economicus rather than Homo Islamicus. 73% said that, of course, they are concerned with it. They want to maximize the return, of course. And whether they are agreed with the profit generated to be transferred to profit equalization reserves, because that's a whole difficult area. 55% said, of course, they are happy with it. And whether they are happy that reserves to be used for future return stability, 65%, of course, they are happy with it. So in the future, when the returns are low and capped up with the reserves is a fantastic thing. And whether their deposit should be guaranteed by the government. 70% nearly said yes. So what we have, yes, institutional difficulties on the supply side, but in terms of moral economy, what we have at the same time difficulty with individuals. That's the financialization issue. So that behavioral norms is an important issue to develop in the larger customers. So the customers' easiness that they are having an Islamic bank account, that's it, their responsibility finishes, that they shift the responsibility entirely to bank. That is not acceptable, because whatever the corporate social responsibility we have in the western part of the world, it is very much demand oriented. Civil society pressurizing for that, but that is not happening, just passing through. But these are the issues that I want to cover. So how can happen? I mean, my understanding is that this is a reality. By discussing the social failure, I'm not condemning the Islamic banking as such, but that's a reality. We have a commercial Islamic banking, and that is there. It will stay there. But what can we do to overcome the social failure at the same time? So moderating the consequences. Having all social aspects, ethical aspect as important part of their objective function, one, and importantly as well, perhaps the third institutionalization have to start, because the initial institutionalization in 1960s, social banking. Then 1970s, since 1970s, is commercial Islamic banking. And perhaps a new institutionalization stage, in addition to commercial Islamic banks, perhaps other non-banking institutions should be generated in the process to respond to the moral expectation, the developmentalist expectations, but establishing a consistency between aspirational worldview and the realities of banking and finance is important. And I consider that social banking can be an alternative to respond to that, and that is something that has to be considered perhaps in the process. And with that, I finish. Thank you very much.